Welcome back to Golden Rule Radio, your yearly recap of the precious metals markets and the news that moves the markets, and the markets related to the metals, because I'm a news that moves the markets kind of guy. And Tori, when you do intros, you're a, markets related to the metals kind of guy. So we have different taglines. You'd think after, 6-7 years now, we'd have figured that out, but we'll just keep doing our thing.
You know, you're a chart nerd. I'm more of the macro underlying fundamentals.
Right.
And I don't care if it's the exact market of gold and silver or a related market, but I'm going to try to give
how
the
those
listener,
markets move the metals.
That's right. And I'm going to try to give the listener a heads up as to why we're going to see the numbers that you're predicting oftentimes. What's going to get us there? Well, let's kind of look back on the year and figure out what did we see? What do we see coming in 2023, certainly, but just starting with gold, it's almost like a straight line would suffice the summation.
Yeah, and it's funny. I know that the Romans think there are a few more days left in the calendar, but as you and I both know, the reality rises and sets on Golden Rule Radio, and this is our last recording of the year. So we're going to go ahead and call today the last day of the year, even though there are still technically a couple trading days left in the year. Probably see not too much action leading into the new year. So starting with gold, you bring up a good point. We're looking at going back to a trig class in high school, a little bit of a sine, cosine, tangent graph where you kind of go up for a while and then you go down for a while and then you sort of end up right exactly where you started. So gold up on the year around 14%, give or take, down about 11.5% from where it started, but we're finishing the year dead even. We've been talking about kind of this slow trickle back up to the low 1820-ish mark the last few weeks. And that's continuing as gold continues to compress back up to that level. But we're right where we started on January 3rd.
Because we're focused, too, just on this week, you and I have been holding out hope that we would see a little bit of a pullback. Hasn't happened as of this recording. That also doesn't mean that we're guaranteed that it's going to turn up. But we do tend to see that as well. We're bucking the seasonal trend on a weak close to the year. Certainly a weak December is common. And yet what is also common is sort of a takeoff at the first of the year. And it'll be interesting to see if we buck that trend as well. But oftentimes in the first quarter, we'll see the strongest activity level for the precious metals as portfolios get restructured. So just like what we saw the first quarter of last year, we started, like you're saying, around that 1830, 1835 level, and we went by the middle of March to 2080. It would certainly be nice to repeat that type of activity and go set new highs, but we're going to need some underlying fundamentals to drive.
Sure, and let's not forget that 2080 mark was the highest price gold has ever been in history, at least in terms of U.S. dollars.
Yeah, and that underlying fundamental had a lot to do with the Russian-Ukrainian war and the invasion by Russia, and we'll get into some of those fundamentals later.
Now, unlike gold, talk about something that we've been talking about all year long, and that's the relationship between gold and another metal, silver. Silver had a stronger year, or at least a more volatile year than gold, but finished up in the same place. So while silver didn't get anywhere near its all-time highs, peaking out in the high 20s, closing in on 30, but not quite getting there, we're looking at silver getting as high as up 16% from the beginning of the year, down as much as 24%. Very volatile move up and down in silver. But lo and behold, we're right back where we started. Silver also finishing the year out pretty much dead even.
And that's despite the most recent rally from September, up about 36.5%. We did top out about a 38% from trough to peak here from September to just yesterday when we hit that cycle high. So again, that volatility continues. And what has also continued to show volatility has been the gold to silver ratio. So based on your summary of these first two metals, that also has ended up relatively stable and flat, despite the fact that we saw a low of around 74 to 1 and a high of 95 to 1 on that gold to silver ratio. Here we are today, 76.
Moving over to some of the other white metals, platinum also volatile, but volatile on the positive side. So we're looking at platinum starting out the year in January with a high inter-year high of about 24% up from where we started, and a low down about 17% from where it started back in January. But platinum's actually finishing the year out up. It's up about 6% as of today, which also slides over to the discussion we have about the ratio, not just between gold and silver, but gold and the Dow, which we'll also look at when we see where the equities market, this finishing the year out even thing is going to change. That conversation is going to change in about 2 charts. But platinum finishing the year up strong, and it is starting to make some ground back up, moving back up towards more reasonable pricing compared to gold. Now, rounding the year out with palladium, something we haven't talked a lot about this year because by all measures, it's relatively overpriced compared to some of the better options like, say, silver or platinum. But palladium has had a very volatile year, up as much as over 80% at one point throughout the year, around about March, April, but coming all the way back down to break even and finish the year out even. So we had a little bit of a decline in palladium here right at the end of the year, taking it down about 11% from the beginning. So you had almost 100% swing up and down in palladium, but just like gold, just like silver, finishing the year out even. Now, despite that, we're looking at a dollar finishing the year up about 9%. At one point, it was up 20%. So I would argue that that just continues to show strength for the metals pricing, commodity pricing across the board. As a lot of commodities have stayed stable despite volatility, they've ended the year stable, I guess is a better way to put it. Even though we've had significant increase in the dollar index internationally, most of the metals have stayed stable. And in platinum's case, it's even gone up this year, despite the dollar going up as well. So commodities across the board look strong, and I think we're seeing that just about everywhere, except for gas prices, which is nice to see gas prices not screaming up this year like a lot of people were concerned about. In fact, maybe down a little bit on the year. But the housing market is starting to scare people as we're expecting housing prices to actually start declining as interest rates go up. So the dollar is strong, gold looks strong, silver looks strong, platinum looks very strong. What doesn't?
What doesn't look strong? How about the equities markets?
Oh, I forgot about the equities market.
Yeah, let's talk about that because that's something that's not flat.
Yeah, I know. I've got that chart next.
I'm
joking.
Figured, I know. The Dow Jones Industrial Average, just to segue into this chart that you're going to pull up, down 7% on the year. And you mentioned the Dow Gold ratio before. We started the year at 19.2. We're ending the year at 18.2. And that's because gold is flat. The Dow's down 7%. So we're inching down. Gold is really not overvalued, or the equities markets are not at a great value until you're sub 10 to 1. So we have a long ways to go before we see that type of activity. But the S&P 500, more than 15%, NASDAQ, more than 25%. So gold's been an excellent hedge with that oftentimes non-correlation with the equities market. So let's jump into that chart.
Sure. As you mentioned, the Dow's finishing the year down, not significantly, not like, say, a few months ago when we were down 21%. At least we've had a bit of a bounce. But realistically, there's been no up. I mean, for the first few days of the year, the Dow, the NASDAQ, the S&P all were up somewhere between like 0.5% and 1.5%. But everything's been down since then. The Dow's been on a great bounce back up since October. I don't think anybody expects that to continue, and we're probably looking at more down. So Dow down as much as 21, currently down, what are we, about 7.5? Right. So the NASDAQ, like the Dow, was down 36% at one point, and it's bounced. No, it hasn't bounced back. It's still down about 35% on the year.
Well, that coincides with the 80,000 tech jobs that have been lost in the year. Not a great economic number to be reporting.
And in between the two, the S&P down about 27% at one point, and it's still down 21%. That's a much broader look at the whole market. So the equities market, despite everybody's hope and our discussion about begging Jay Powell to bring the punch bowl back, the markets are not expecting it to happen, or you'd be seeing bounces at this point.
I totally agree. And 2022 is a year of a lot of underlying fundamentals that have stimulated this volatility. So start to finish, it may not look that much different in the precious metals. I'm very pleased, actually, by the performance of the metals and them doing their job in a very inflationary market. And, that inflation's here to stay. The numbers coming out now are that Christmas sales were up 7.6% in 2022, and that sounds outstanding, except keep in mind inflation was 8.5%. So we didn't keep up with inflation and spending. People spent 7.6% more for the same stuff as last year.
Right.
And This is a year where we've seen the Fed funds rate go up to 4.5% with all the rate hikes. And that was the biggest headwind for gold. Was we went through a whole season of aggressive rate hikes, which caused a U.S. dollar rally. So that U.S. dollar chart is the chart of the year for me, both domestically and internationally, because gold went up to new highs and had climbing prices in every other currency in the world. It's just the U.S. dollar as a world reserve currency that showed the gold price to be relatively weaker. But here we are, again, flat. And that interest rate hike policy is going to continue into the year. The inflation looks like it's going to turn and start to climb anew. $4 gas is the expectation now in the first quarter, maybe the first half of 2023. And that's all coinciding with the M1 money supply. So I want to get into some of the underlying reasons that gold climbs and falls in terms of its nominal price. But M1 money supply is a huge reason. It's up 120.3% above its pre-pandemic level. So just pre-COVID, 2.8 years ago, since then, we've absorbed the equivalent of 23 years of normal monetary stimulus in just 2.8 years with that much money being printed. That causes the inflation, but it also causes gold to go from, 1,500 to almost 2,100 in that same period of time. So that's encouraging, but gold to me is in this 2-year consolidation pattern. If you look at the chart in the long drawn out fashion, it's not just this year that's flat. I'm pretty pleased with the fact that to me it's building this bullish foundation and it's going to respond. What's it going to respond to? Well, it's going to respond to equities markets, what goes from here. But bullish fundamentals, things that cause the gold price to climb, are perceived risk in the markets, geopolitical strains, debt, money supply or spending, a decrease in the U.S. dollar. Those are all bullish fundamentals. And look at what we received in terms of all of those headwinds being opposite this year, because the bears are U.S. dollar increase, certainly COVID stabilizing, which is less of a perceived risk, Treasury yields spiking, and relative stability now in the interest rates climbing. But that's also bearish for gold. To me, we're switching to bulls. All right, we just passed a $1.7 trillion spending bill to add to this record year of spending, and we're going to be at $33.5 trillion in the national debt. That's insurmountable. It looks like now within the next decade, just our interest payments are going to be $1.2 trillion as a government here. So all eyes still on gold. It's doing its job. I'm very encouraged coming into the year and encourage you to add to your positions every time we have an opportunity to see a dip.
So thank you again for joining us this whole year at Golden Rule Radio. And we'll see you again next week, next year. Hope you have a wonderful holiday season, had a Merry Christmas, and a great, safe New Year coming up this weekend. If you liked what you heard, as always, you can do the YouTube things by now. You got to know where the buttons are. Just go click them, or don't. That's fine too. But what you should do is head on over to our website, McIlvaney.com, and you can learn more about McIlvaney Precious Metals, and better yet, give us a buzz. We can be reached at 800-525-9556. Discuss your personal portfolio with a precious metals specialist here at McIlvaney Precious Metals. Thanks for listening and have a great week.